All right, fellows, thank you for joining me today, fellow traders. This is Trader C Brown, and I want to be sharing with you today what I am actually expecting for the month of actually week 14 now, not even the month of April, but week 14. First of all, let's start with week 14. All right, week 14 is just starting tonight, and trading week 14. And also, I'm expecting that the market is going to go a bit more favorable this coming month of April, because March was a bit quiet. The market was really, really undecisive in the month of March, here and there. So, of course, there were a little profit here and there that wasn't really sustainable for a while, because we had break-even month. For me, it was a break-even month. I didn't actually really gather a lot of profit this month of March, but it was a good start. We can see that the market is getting ready for us, and more in our favor, depending on the strategy that you trade. So if you can see my chart now, I am on GBPUSD as we normally do. And then I know many of you are scalpers, many of you are intraday traders, many of you are swing traders that watch my video content. But what I'm trying to share with you here is what I know will benefit everyone. So hopefully you'll be able to take advantage of this, depending on the strategy, and irrespective of the strategy anyway, it doesn't matter, but ensure that you follow the momentum and the directional bias that I'm going to be giving concerning these pairs, especially Euro USD and GBP USD. And we will add a few other pairs as well. As you can see, they are highlighted on my watch list. Now, let's continue this. Firstly, let's look at what the overall market has for us from Edge Finder that I use here to look at I'm looking at now the fundamental aspect of the Edge Finder. So I want to look at the fundamental aspect of the market. This is the reason I use Edge Finder. It's all about fundamentals. I don't use it for technical. I use it to confirm my technical analysis, but price action is the king. Okay. So these are the things I'm looking at based on what this sentiment is giving us. We can see that based on retail sentiment and also based on other fundamental data put together, the economic data, technical output, everything put together, we can see that there are selected pairs for trade that we should be looking at this week. So we have JAMA 30 is looking bullish overall. Then GDP is bullish. USD is bullish. Then US 10 is bullish. We have other bearish pairs, GDP, AUD, and so on and so forth. And you can see that there is no Euro USD on this list, because Euro USD is neutral at the moment. That means it's not responding, but we're still going to look at it on technical aspect of it. But GBP USD is very bearish, so we're looking at that. So we have AUD USD is very bearish. We're also going to look at that in a moment. So let's now we have this idea. We'll look at the ones that are bearish right now. So GDP is bearish. We'll go to GDP. Question is, does that look bearish to you? Of course it does. What you want to look at is, as a day trader, you want to look at the behavior of the 4-hour and the behavior of the 1 hour. Then as a swing trader, you want to look at the behavior of the weekly and the daily. So if you look at the weekly as a swing trader, what does it give you? It gives you a consolidation, because overall we can see that the only structure, if you turn to the line chart, was this one that was broken. So even though it looked bullish, it's still bearish. It's still bearish by structure. So we can see a breakout structure, a pullback into the zone, and we can see price reacting to this area here. And that might be maybe the 61 around there. Yes. So you can see price trading between 61 now. It's not trading below 61 actually. Price is trading below 61 of the fib. Obviously, it's telling us that there may be a pullback, a drop. Again, these are liquidity area. So that's telling us that even the weekly is beginning to look bearish, as we can see that. So then you can also look at the daily. You can look at the daily. Just a minute, let me see. That's something I'm trying to pull up here. So sorry about that. You can also look at the daily. All right, that what is the market doing in the daily? What is the market doing in the daily? And that aspect of observing the market in the daily, let me go back to that. You can see that it is bearish, kind of, but consolidation bearish. So we can see that even in the daily, it may look as though it's bullish, but it looks structure-wise, it looks bearish because this low has been broken. And then we might see price may drop even lower. But we're looking at the bearish momentum based on overall. But on a daily, it's still so much in a consolidation phase. Anyways, so is it going to break out of it, break down, and take these lows and keep dropping? Who knows? Maybe price want to come to 1,700. Who knows? 1.1700 psychological level. We are not sure about that yet, but we can tell that it is bearish in nature already. So altogether, we are looking at selling GU. But let me just do my analysis so you understand. The first thing is what is the market doing? I trade the fractal. So what is the market doing? First of all, we see that the market has given us a strong follow through to the downside, very massive move. And then eventually price broke that low. That was a strong follow through, and then created a fractal low here. So this is the range at which we are dealing with at the moment. That's the recent range that we are dealing with at the moment. Okay, and this is the recent low, and that low has not been broken. And this is the range, and price is ranging right now. So if I was to look at the possibility of getting into this market to trade, I can see that there is a kind of a structure undefined, like a consolidation. So what I'll do is to put in my gang box and then watch what the market has done within that area on my discount. So the price is still trading within that. So the question is, what is the direction? What is the direction for me if I'm going to take this trade? It's still a strong follow through to the downside. And then price push even lower by breaking that low, went lower, and then created this structure here. So again, looking at this, we are very bearish. The market is still bearish. And we can see that because of the break of this low that led to the previous low. See, price dropped strong and then led to this low. So we have a strong follow through to the downside. So for now, the market is still selling. So we still have a sell pressure on the market. So where am I looking forward to sell? Well, although the market looks already dropping from that top, from the head here, so I could literally expect the market to move even to the top side, maybe a little bit up, and then another sell will happen. So maybe a candle might push higher before, or probably break outside that and then retrace and then drop continuously. Who knows? But I'm not sure if that's what the market will do. But all I know that at this zone right now is a very tempting area. So price is creating consolidation. We are expecting that there could be a push up a little bit, one more push up again, that will make the H1 to be more into a bullish momentum. So the H1 might go bullish a little bit, and then we'll look for a sell. That's what I'm looking forward to. So that means on the H1, we might see that price want to push up higher to take out the liquidity, and that will make the H1 bullish, and then we'll now look for a sell at the sell region. Now, to look for a sell here only depend on the entry criteria, which is strategy. You need to have your entry criteria. But if I should guide and help you with that, you can see this order block has been mitigated. And then we also have this order block has been mitigated by his. So this is the recent high that we can expect price to get to. All right. So let's just anticipate that price will get to this high. So if we go lower to 15 minutes, can we find any reasonable order block that has not been mitigated? Yes, we have this one here that has not been mitigated. So we can see that there is a possible push that price may come over here by Monday or Tuesday, whenever the market opens. And then that area will be our opportunity to sell, which will not correlate with the 4-hour time frame of the sell structure that we have. So we're looking at opportunity to sell from there and then put our stop loss a little bit based on structure, a little bit higher than that. And then we're targeting this low. That is your first 1, 2, 3 for the week. And if you can get this 3% for the week, that is a good trade. Okay. So this is what I'm looking at on GU. I hope that is clear. So let's go back to let's go to Euro USD. Although Euro USD is still looking very much on neutral, but let me look at the technical aspect of it. The fundamental is telling us it's neutral, but let's see the technical aspect. You can see obviously on the 4-hour Euro USD is bearish. Is very, very bearish right now, looking bearish. So we can see it's creating lower high, lower lows. And if I was to use order flow for this quickly, you will notice that price breached this low eventually with this drop. So we now have obviously a lower low right there when price stopped. And then what happened? Price pulled back up to break the low again. We have another lower low right there. So we have another structure here. So we have price dropping lower. Okay. Now we anticipate this is the pullback and this rejection. So we should be anticipating more lows on here, maybe lower to breach that low. So that's what we're anticipating that this may be. So based on this analysis that I just done, it's obvious that we should be looking for sell on Euro USD as well. So now let's look at the strategy applied in a way for those of you who doesn't know. So we have a break here, just like you use I have a break there, and eventually price took out this low. So this was a low, this was a recent high, and then eventually that low was breached. So what happened? Now we have this low taken out. So this is the area we're focusing on Euro USD. So here we have the previous low breached. And what that means is that there is, if you notice that price closed, the next candle closed below it. There was a reversal and the next candle closed below it. So what that means is that the market has given us a follow through to the downside. So we have a follow through to the downside. That means there's still more sell going on. So for that reason, we have this low created, and then the market took that low out, you see. So we can see structure changing here. So this was the previous high that was breached, low. So we see this, and then what happened? The market gave us a new high, and then what happened? Price came back up and then went lower to breach that. So we have another breach right there. So for now, we have a change of direction. From here, we can now see that the market has given us a reversal to the upside. So we have a no follow through to the upside. So what that means is that the market is reversed. And for that reason, we're going to be looking at this range for a possible opportunity to trade. So what that means is I'm going to be expecting price to push higher. So I'm looking for possible two things here. Remember, the momentum is a sell momentum. We can see the market is selling. So to buy in a selling market is dangerous. So you are trading against the trend. So you wait for price to push up. That's the way you do it. You rather sell than buy this market. So wait for price to push high and take out liquidity, and then you'll be able to sell so that it can continue lower to the downside. So it may not be able to breach this one. It might break this high, take out this high, but you want to see that at least price is in your area to sell. Maybe this order block might be the best place to look at it from the 1 hour, which is already mitigated. Okay, this one here has not been mitigated. A little bit touch, maybe somewhere around there. Who knows what the market wants to do? So you want to look for price action that will get to that level and then be able to sell from there. So if I go to the 15 minutes, I'll be waiting for price to do this, to push into this order block here on this 15 minutes on Euro USD. And I'll be waiting for price to get there, and I'll look for sell, because it is a sell market on Euro USD, even though the fundamentals have not agreed with it. So personally, you want to target that low, and that will be your trade setup for Euro USD as far as I'm concerned. So I'll be looking for sell opportunity at that level on Euro USD. So that is for Euro USD and GBP USD. So I'll take one more, which is AUD, AUUSD. I know most of you trade that pair based on Asia. For those of you that trade Asia section. So let's look at that. And it looks bearish based on fundamentals, right? Look bearish based on fundamentals. So let's see if at all that is true. Let's look at the daily. On the daily, the market is obviously in a consolidation phase, as you can see. So the market is dead. It's not working. Don't force it. But let's see, as a day trader, we can always, for swing traders, there's no opportunity there at the moment. As a day trader, let's see what we can get from that. Day traders will still have some opportunity to catch some 50, 60 pips, 70 pips in the market. So let's look at the behavior of the structure. Although it's very funny, but we are on a lower low right now. So we have price drop to create a liquidity. As you can see, created a liquidity there, and then eventually broke. So here now we have a new low created. So we have a new low created. That's a new recent high and low. So here is what we're focusing on the 4 hour. So what happened here? This is the low that happened and price breached. So we can take this low, and then we can find out that it is a follow through, a not follow through, because we have a reversal there. So that's beautiful. So now, well, again, not follow through means that the market is pulling back up, it's buying, but it's a sell market. So that means you should be expecting the market to push up and then counter the trade. So what if you push higher and then take out a high? Then you will have to watch for what market do next. So that's why the daily analysis that I do help a lot of traders in our trading lab. You'll be able to catch these moves as the market evolves and changes, because the market always change. So when the market shifts momentum, we follow. And that's why I opened the section for the daily trades for people who are interested in joining our group for the trading lab, for the opportunity that you may have to take it. So let me just share that with you now on this, so you'll be able to see it. So here's what I'm talking about. Here, you will take the daily trade analysis setup every day. If you click here, it will be $30, 30 pounds a month. So every day of the week, trading week, you will get a setup, at least 1 or 2 setup. If the opportunity is there, we'll be able to trade, and then you make money. So that's how we do it. The daily trade gives the people opportunity to shift momentum. When the market shifts momentum, we will just follow. So even though I'm doing this right now, what if the market shift momentum by Tuesday, Wednesday? What are you going to do? So that's why if you're struggling to follow trade like that, join the trading lab. All right, now let me do this briefly and then we'll round up this section. So we have this range right now that we're looking at, and prices at equilibrium as well. That's why you see multiple reaction there. That's price action telling you that the market is struggling around that level. So let's say price drop lower and take out this low, then we will shift momentum. We'll have to readdress the whole thing. But at the moment, what it looks like for us is that we should be anticipating for a possible opportunity to buy. To set the market over here around this high. One market to come up there and then we sell. If the market drop low, let's assume the market drop low. Let's assume the market drop low at the moment and take out this liquidity and then fail to break this low and then started heading back up. Then you look for buy to the upside and then sell from there because it's a sell market. So that's what you will do. But at the moment, I won't be able to push further because it could drop low. If it drop low, you should be looking for price action here. Let me go to 15 minutes and just show you what to expect anyways. That's why we're here. So on the 15 minutes, you can see a lot of liquidity pool here. Don't use this order block. It's already been mitigated. So you want to use this one. So let's see on the 15 minutes, we have this order block of this AUD USD right there. So you want to use that order block, okay, which is also called fair value gap. You can use that fair value gap right there, whichever, but it's still the same. So you have that, okay? And now with that portion there, you are anticipating price to come down. Since it's coming down, you want to anticipate price come down there, okay? Because I just gave you two directional bias that you can look at on AUD USD, okay? So you are long in there because you want to see price take out liquidity and then head back up. Now, the question will be, where do you intend to stop on this trade on the other side of the picture? So you want to also look at possible price action. Liquidity pools are here. And also, if you look very closely, there are struggles here in price action. Struggle here in price action. So I might want to go into the 30 minutes to look at it, price behavior properly. So that is clear now. It's clear for me now to see what price is done here. So, and I can use on the 30 minutes, this price action, which is the sell zone order block right there. So I can use that as a target and also possible entry opportunity for a sell move that may happen. So that's using one stone to kill two birds. So you can sell right there and expect price to drop because overall on the 4 hour is a sell market. So this is exactly what I would do based on this trade. These are the two settings, trade setup that I look for on this pair, just in case it comes down. But if it fails to come down, it goes up from there, then you should be anticipated to sell only. So this is what I want to share with you today. I hope you guys you got it. And then remember, always check your fundamentals for the week. So starting from the month of April, 1st of April, there is PMI by 3 p.m. on Monday. Then on Tuesday, we have job opening. Okay, on Wednesday, we have other PMI coming in as well. And then on Thursday, there are unemployment claims, and on Friday the biggie, which is northbound payroll. So all this time where you have the market going to change direction, create reports in the news, I will advise you not to trade. Don't trade the news. Stay away. You don't know what the spike is going to be like. The spread is going to be like. You want to stay away from that. So whenever you think that the price, the market is going to release a report, stay away from the market. 20 minutes before or 10 minutes before, close your trade and get out. And after the trade, 10 minutes, 15 minutes, 20 minutes time, and you see a good opportunity, come in and trade and make your money. That's what we do. All right. So these are the trade setup I'm looking at for this week. I believe you guys learned something new. So if you want to join our team, you know where to find us. The website is on the description of this page of this video. Get and join us. You can take the course. You can do one-on-one mentorship with me if you want. And then you can give me contact me on my Telegram group as well. All the informations are in the description below. Okay. All right. Happy trading. This is week 14. Happy trading. I'll see you in week 14 in a couple of hours. Bye for now.